Good afternoon, everyone. My name is Pavel, and I'm with 3G Capital in Toronto, Canada. Today, I'd like to talk about lessons learned and unlearned, most importantly, in the course of our investment journey over the past 20 years. Now, before I do so, I'd like to give you some brief background on 3G Capital, and then I'm going to talk about one of our favorite investment ideas, and I'm going to use it as an example, talking about lessons unlearned. So, 3G Capital at a glance. 3G Capital is a private investment partnership, and we look to invest in undervalued businesses around the world. Our investment universe includes frontier, emerging, and developed markets. We seek to invest at single-digit multiples in industry-leading businesses around the world. For the avoidance of doubt, we're not a quote-unquote different kind of value manager. We're not a new kind of value manager. We're as traditional as it gets. We still insist on low price exhibited through a low multiple. We've been in business for over 18 years, and in the course of our existence, we generated a track record of significant outperformance versus the market. How did we do it? Well, we did it by following what we call a winning investment process. So we typically focus on industry leaders with a track record of staying in the lead for decades. We focus on businesses that stick with their core business, they're laser-like focused on it, and they avoid chartering into unfamiliar territories. And finally, we avoid fast growers. As we all might have read, Carrie Loomis, and that the author from Forbes, and she's been referred to by Buffett many times on that specific matter. She did research, and basically what she concluded is that any growth in excess of 10% is really not sustainable in the long term based on her studies. Finally, on the management front, we always treat management quality as secondary, business quality being primary. Again, goes back to Buffett. He used to say that you should invest in a business that even an idiot can run because someday one will. Secondly, we basically don't assume that brilliant management is going to be able to tackle complex problems. Again, goes back to Buffett's famous saying about the fact that if you have a management with a reputation for brilliance, tackling a business with the reputation for poor economics, it will be the reputation of the business that will ultimately prevail. So now I'm going to talk about one of our favorite investment ideas. What is interesting about it is that it actually fails to check any of the boxes on the winning investment checklist that I just described. So basically every single one. So it's a company that does not operate within a well-defined niche. It's a company that has a history of expanding into completely unrelated silos where they have no track record of leadership. They have a track record of major strategic pivots over time. Management is a major source of competitive advantage for the company. Management actually has propensity to take on complex challenges. And finally, the company grows at a pace that's lightning fast. So the company is called kaspi.kz, and by now you're probably are all wondering, like, why the hell are you doing something that is so different from what you did in the past? So here are the thoughts. Why Kaspi? So it goes back to the fact that when you read about a lot of other great businesses, such as, for example, Apple, you start discovering interesting things. We actually read about Steve Jobs, and he's got that saying that normally success is what typically stands in the way of bold innovation. And that really strikes a chord with me. And he talked about his experience at Apple, where he basically came up with the original Mac, which was like a super successful product. Well, then it was so successful that it made him scared to innovate. So his subsequent iterations of the Mac were just not nearly as good. They were kind of like incremental improvements, nothing revolutionary. And then he got fired. And he said that was the best experience for him because after he got fired, he felt like a beginner again, and he could start sort of with this day one mentality, free to innovate again. And after that, he came up with the best products, the iPhone, the iPad, etc. And of course, in our case, I didn't get really fired from anywhere. However, I could relate to the experience that sort of the win investment checklist that we had and that resulted in a track record well ahead of the market is sort of held us back a bit. And I felt that maybe there was a better way to do things. And the reason that I thought that is because when I studied companies such as Amazon, Apple, BYD, basically world-class companies, I discovered that those companies created tons of value over time, yet each one of those companies that would have failed our win investment process checklist. We would have looked at Apple, would have said, you know what, those guys, they should just stick with making desktop computers. We would have looked at Amazon, would have said, well, they should just stick with selling online books. They're venturing into unfamiliar territory. They're not sticking with the core business. We would have looked at BYD and would have said, you know what, with BYD, they really should just stick with making cell phone components. So basically I said, look, let's adopt a beginner mindset and see maybe there is some common denominator that leads us to discovering another way of identifying successful businesses. And so when it really dawned on me was when I read Jeff Bezos' thoughts on Amazon getting into web services. So he talked about the fact that when they got into the cloud, one of his shareholders approached him. They said, look, Jeff, what are you doing? Like, what does this have with selling books online? You should just stick to your knitting. And Bezos responded, he said, look, I am sticking with my knitting. And my knitting here is being obsessed with customer experiences, innovation, underpinned by operational excellence. So this is the competitive advantage that we have. So we're not mastering a specific arena, we're actually mastering a specific competitively advantaged approach, which would then proceed to apply to multiple arenas. And this is, like I said, this is where it dawned on me. So successful business doesn't have to be about mastery of a specific domain. It could be about mastering an approach and then applying that approach to a number of different domains. And of course, if you look at companies such as Amazon, Apple, BYD, some others, that's exactly what they did. So they mastered a competitively advanced approach, then they applied that approach to multiple arenas, seemingly unrelated, and then they created tremendous value in process. And this is at the core of the investment case for Kaspi. So a brief introduction to Kaspi. So the formal definition of the business, it's the largest ecosystem in Kazakhstan encompassing marketplace, payments, fintech, and travel. Now, it's not exactly the most accurate definition, even though this is what appears on their sort of the website that lists the industry classifications. A more accurate but less tangible definition would be to say that Kaspi is a customer experience design company. And just take this one on faith for now. I'll tell you more detail a little later as we go into the presentation. So it's a company that has a brilliant management team with a track record of making bold strategic pivots, even though it might have flown in the face of conventional wisdom. It's a company that has a tremendous growth potential. Historically, it has grown at a 30 to 50% pace. And somewhat less important, but still important, is the fact that the company is cheap based on traditional metrics. Like I know, in today's day and age, people say that price doesn't matter, and if it's a great business, you should be paying 50 times and not be worried about it. Like I said, we're very traditional in that sense. We're not really buying into that narrative. So in our world, it has to be a low multiple, and even on traditional valuation metrics such as PE and dividend yield, Kaspi is selling for about just over 5 times earnings on a forward number, and it's got a dividend yield of 13% on a forward basis as well. And it's kind of interesting that Buffett once said that it's better to buy a good business at a fair price rather than buying a fair business at a good price. Like we typically try to get both, good business at a good price, but with Kaspi we actually have a unique case whereby you get in a price that's phenomenal and you get in a business that is pretty phenomenal. And I'll give you more detail on that in the following slides. So here, like I said, Kaspi is number one marketplace, or number one in payments, number one in fintech, number one in travel in Kazakhstan. Within each of those arenas, the company enjoys dominant competitive position versus its rivals, and they have a significant advantage in terms of scale that prevents competitors from breaking in. However, that competitive dominance in those above arenas is not really that relevant to the investment case, because it's simply an outcome of their main underlying competitive advantage. And the company's main underlying competitive advantage is the company's approach that it developed over the years. And then it consistently applied that approach across multiple arenas with great success. So again, going back to Amazon, Apple, BYD, it's the same concept. So as opposed to mastering a domain, they master an approach, and then they apply it to multiple arenas. And the approach, the competitively advantaged approach for Kaspi, is basically the company's ability to provide a seamless customer experience through technology-driven innovation and big data analytics. And that's why Kaspi doesn't really view itself as a fintech company or marketplace company or a travel company or payments company. Basically, they view themselves as a customer experience design company, and they go to the market as such. And it's instructive to look at the company's track record and what they've been able to accomplish by taking their approach and applying it across a number of different domains. So before current management team took over in 2008, Kaspi was known as Bank Kaspi, which was basically a traditional sclerotic bank in Kazakhstan destined to sail into oblivion. Well, and then the new management team changed the course. So they developed the competitively advantaged approach that then proceeded to apply to different arenas. And here's the track record. So Kaspi entered fintech in 2008. Within 6 years, they were number one. Then they entered payments in 2012, and within 4 years, they were number one. Then they entered marketplace in 2014, and within 3 years, they were number one as well. And what is remarkable about them getting into marketplace is the fact that before they came into that arena, Alibaba used to be number one. So they dislodged Alibaba in process. Then they entered mobile e-commerce in 2017. They were number one within less than a year. They entered P2P payments arena in 2019. Again, within a year, they were number one. Again, what is remarkable is that before they got into that space, Visa and MasterCard, they had 90% market share in Kazakhstan. And so they were able to dislodge Visa and MasterCard from that position. And Visa and MasterCard are world-class companies, great competitive advantages, and you know what? Kaspi just beat them to the punch. And you look at the market for P2P payments in Kazakhstan today, it's 90% Kaspi, and collectively Visa and MasterCard is less than 10%. Then Kaspi entered point of sale in 2020, again, number one within less than a year. They entered travel, 2020, number one player within less than 2 years. And of course, they entered all those arenas in a highly profitable fashion. So it wasn't the case of saying, well, we're just going to spend to become number one. No, they actually made a significant amount of money in process of applying their approach to different arenas. If you look at their track record for revenues and earnings, they've grown in the past 10 years at over 35% per annum. They spent almost nothing on CapEx, less than 1/10 of cash flow. And they generated ROEs of over 75% while maintaining a net cash position. So it's a phenomenal result, which I think very few companies in the world can even match. And now, this is the past. What do we expect going forward? So going forward, I think we're going to see three things. Number one, we're going to see continued growth as the company consolidates the consumer spending market in Kazakhstan. If you were to look at, for example, Alibaba or Amazon, Alibaba accounts for about just over 20% of consumer spend in China, Amazon accounts for about 10% of consumer spends in the US. And if you look at Kaspi, they only account for about 1% of total consumer spend in Kazakhstan. So obviously very high growth potential. Now, what is also notable is that Kazakhstan is a much less competitive market when it comes to consumer spending, so compared to US and China. So I think Kaspi might be faster in consolidating market in Kazakhstan compared to Alibaba and Amazon, and they're probably going to be able to do it at a higher margin. Now, they also have a second growth avenue, and that would be geographic expansion into adjacent geographies that share similar linguistic and cultural characteristics. And the company is specifically targeting countries such as Uzbekistan, Azerbaijan, and Ukraine. Collectively, those markets are 4 times the size of Kazakhstan, so that gives you an idea of how much bigger they can get over time. Lastly, discussing competitive threat. It is not very likely that you're going to have a competitive threat standing between Kaspi and future growth, because for global players, those markets are very tiny, so it's not really worth the headache entering those markets. And also those markets have very unique cultural and linguistic characteristics that makes it even less appealing for a global player to spend their time getting to those markets. Now, there are a couple of regional players in Russia that could have been a competitive threat. However, now with the Russian invasion in Ukraine and resultant sanctions, those companies are not really thinking about expanding out of Russia. They're sort of just in a defensive mode, so they're not going to be entering any markets outside of Russia anytime soon. Now, this concludes the discussion specifically of the economics of the business. Now, it is important to discuss management, which I think is a big part of the investment case. The company is run by Mikhail Lemtadze, who's a Harvard grad and basically fresh out of Harvard. He inherited a company which, like I said, was a traditional tier 2 bank that was basically failing. It was doing so badly that the private equity sponsor basically considered that bank a write-off. However, despite all the odds, Mikhail and his team managed to develop the company into the largest publicly traded company in Kazakhstan. And basically, 12 years ago, 14 years ago, the company generated 0 profits. And this year they're on track to generate about $1.2 billion in profits. And again, how did they do it? Well, they did it by doing things that made sense, even if they flew in the face of conventional wisdom. So they have a history of making really bold moves, really unconventional. However, they made sense, and they were done, and they were done quickly. So you can look at their track record, what they've done. So basically, Mikhail comes in as the CEO. The first thing he does, he just fires all the top management, like everybody, 20 people. And he just hires a bunch of tech-savvy MBAs from Harvard and places like that. And he just says, listen, maybe we don't have experience in fintech marketplace, payments, whatever, but we're those guys are tech-savvy and they're smart, so we'll figure things out. Second thing he does, he looks at the bank that they basically ran at that time. It was a bank, and he said, look, you know what, we're not going to make a difference to our commercial clients, and that was 95% of the business. He said, look, through bold, technology-driven innovation and offering a seamless customer experience, well, that's going to matter to retail clients, but not to commercial clients. So they got rid of their commercial clients, which was 95% of the business. So just overnight, they get rid of 95% of the business, which was exactly the right thing to do. But I just don't think you'd encounter too many CEOs who'd be willing to kill 95% of their business overnight. Later on, the company had this product, credit cards, which accounted for 40% of sales and revenues, revenues and profits. And this was the best, biggest, the most successful product for the company. Well, then Mikhail and his team look at the product, and what they discover is that's the product hated by the customers. And since their entire ethos is about creating products that customers love, he just said, look, it's a profitable product. However, the profits that it generates are unhealthy, toxic profits. And if we keep this product, what's going to happen is that eventually it's going to corrupt the values of our company and is going to lead to the downfall. So it took them 48 hours to get rid of the product. So just like that, overnight, they just killed the product that contributed 40% of the profits. And then another thing that's remarkable is that Kaspi uses NPS as their guiding light, and everything is run on NPS because they love to create customer experiences that delight consumers. So they don't look at necessarily revenues or profits, or they don't look at customer growth to evaluate how their teams do, because they say, look, if you create products that customers love, well, profits, customer growth, revenues, it all follows. So this is what they do. And finally, what is also unique about them is that they focused on perfecting their approach and then applying it to multiple domains, as opposed to just limiting themselves to a single domain domination. Continuing on to capital allocation, management is fairly astute on that front as well. They acknowledge that their business is not a capital-intensive business. They don't really need to make acquisitions. There is not much internal capital spend, so they're saying, look, we have all this capital that we generate, and we're happy to send it back to the shareholders. So historically, they paid out over 70% of their earnings as dividends, and they also were willing to buy back stock when the price was low. Then we can review the alignment of incentives, basically between the CEO, Mikhail Lemtadze, and Chair Vyacheslav Kim. They own about 50% of the business. The private equity sponsor, Vostok, they own 31%, and the rest of the management teams owns another 3%. So now that we covered business and management, we're going to cover the price. So this is the most self-explanatory piece. So it's very easy. You can see that Kaspi is selling for just over 5 times EPS, less than 4 times revenues. It's got a forward dividend yield of 13%. If you exclude the cash the company has on its books, it's going to be even lower than 5 times. If you look at any other competitor anywhere else in the world, like you take, Argentina, Indonesia, China, whatever, so they're all going to be selling for probably 30 times. The dividend yield is going to be non-existent. And importantly, those multiples, whenever Kaspi gets that fair multiple, is going to apply to significantly higher earnings. Kaspi should see future revenue growth in excess of 20 to 30% as it consolidates the market for consumer spend in Kazakhstan and adjacent geographies. And of course, we should see earnings growth in excess of revenue growth, because that business has a fixed cost base, or relatively fixed. So as your revenues grow, your expenses are not going to increase at that same pace. Finally, the discussion about the risks, which I'm sure anytime you see a company out of Kazakhstan, this is the top of your mind. So here are a few risks. So we can start with geopolitical risk. We've all seen what happened in Ukraine. So, one risk could be, what if Russia decides to go into Kazakhstan? I think, that is a very remote risk, because Kazakhstan, unlike Ukraine, is really careful to avoid institutional hostility towards Russia. They cooperate with Russia both economically and militarily. So, there is really no reason for Russia to intervene. Also importantly, Kazakhstan enjoys a security umbrella of sorts provided by the Chinese, sort of a telling story. Back in January, there were some riots in Kazakhstan, and the government of Kazakhstan, they asked the Russians to come in to sort of quell the riots. And the Americans were very concerned about it, because they said, look, once you invite the Russians in, you're never going to be able to get them out of Kazakhstan. And what happened is the Russians go in, basically the riots get suppressed, and then what happens is the Russian president gets a call from the Chinese ambassador. And the Chinese ambassador basically says, look, you guys should be out of Kazakhstan. And the next day, the Russians get out of Kazakhstan. So that sort of tells you that, obviously, if you have China having this kind of influence, it is unlikely that Russians are going to intervene in Kazakhstan the same way they intervene in Ukraine. There is also FX risk. I don't think that's a significant risk because if you look at Kazakhstan historically, any kind of local currency depreciation would lead to inflation of a corresponding amount across the company's business lines, thereby offsetting any impact of FX depreciation. You also have the risk of state meddling. Now, if you look at the track record of the government of Kazakhstan, they actually treated businesses in a very reasonable fashion. There are tons of Western businesses that have been in the country for a long, long time, and they all, by and large, had pretty positive experiences. Now, that said, if you're the largest and the most profitable company in Kazakhstan, I do expect that at some point you're probably going to be asked to perform some sort of social service. I think there is a very real chance of that. Now, it is unlikely that it's going to be, social service to the tune of 100% of your market value. Maybe it's going to be 2% or 5%. But, at 5 times earnings and 13% dividend yield, that's very much priced in. And lastly, you have credit risk, as obviously the company provides credit to its customers. However, they run it in a low-risk fashion. They extend credit only to low-ticket items, short-duration credit, a few months, and it's only for products and services that are specifically purchased from Kaspi. And Kaspi has a very good insight in terms of data into what those people do and how they live their lives. So their data basically is much more extensive than just getting sort of like your run-of-the-mill credit history from a Central Credit Bureau of Kazakhstan. So unlike other banks, which only have access to the Central Bureau of Kazakhstan data, Kaspi has basically the data on how you live your life. Because for most people in Kazakhstan, they live their life through the Kaspi app. And therefore, Kaspi, because of they having that access to the data, they can underwrite in a much less riskier fashion than your run-of-the-mill banks. And I think I've seen the estimates where they say that Kaspi has loss experience that is 4 times lower versus a traditional bank because they have access to that to the data. But even then, you can stress test it. You can say, well, what if there's a really bad recession, and let's say, bad recession, normally credit losses go up 3 or 4 times. Let's say, well, they go up 5 times. What happens? Well, really nothing happens. If they go up 5 times, Kaspi can easily absorb that within maybe 3 or 4 months just through earnings. So that concludes the discussion of the risks and the investment case of Kaspi. And now I'm happy to address whatever questions you guys might have. I guess I can use the microphone too. Or?
We would like to ask you to use the microphone before any question. Thank you.
Hi, Pavel. Hello? Yeah.
Yes, hi.
So what kind of due diligence did you perform on the financial statements just to make sure that all those numbers are real? I mean, frontier markets, it's usually, information is usually the most difficult thing to obtain. And you say it's 5 times this, 6 times that, but this and that is actually the key element to the valuation.
Are you going to get the cash raise?
Yeah,
or
no, so when you say the growth is there, the earnings are there, the sales are there, how do you perform, how do you validate these numbers? I mean, they come from the company, right?
Yeah, they come from the company, obviously, okayed by the auditors. It's a Big 5 auditor, right? So it's not, Johnny in the basement.
China also has a lot of Big 5 auditors.
Right. So look, I mean, there are a couple of elements to it. Obviously, you have to do some due diligence on the ground. You just have to make sure that the story makes sense, right? If Kaspi is saying they're, the largest and the biggest and the most profitable, well, then people in Kazakhstan, they should have the same view of the company. And, if you basically put your feet on the ground in Kazakhstan, that's what you're going to see, that the company is pretty much central to the life of any person in Kazakhstan. So, if you're going to file your taxes, make payments, it's all through the Kaspi app. If you're going to buy something, through the Kaspi app. Credit, mostly through the Kaspi app. So it's basically just so prevalent. Like anybody you talk to in Kazakhstan, anywhere you go, that's what you see. I mean, I can even tell you that if you go to like, deep into the Kazakhstani countryside, right? You're driving down like one of those dusty roads, you're gonna see one of those old ladies selling potatoes on the side of the street. So you're gonna be like, well, how much is this bucket of potatoes? They're gonna say, well, it's, whatever, 510 gay. You're like, okay, sure, I'd love to buy it. You take the potatoes, and what the older lady is gonna say, she's gonna be like, yeah, but now, like, let's match up the Kaspi QR code, because that's how she gets paid. So that's sort of the first, element. I can also tell you that, for example, when there were riots in Kazakhstan, the government shut down internet in the entire country. There was no access, except for to Kaspi. Kaspi still had access to internet because Kaspi is so important to basically like all the payments collection, et cetera, in Kazakhstan, that if you shut down internet for Kaspi, like the life in Kazakhstan would have stopped. So that's the first element. So like, are they really as important as they say they are? Well, then of course you have to say, well, like are those numbers really believable? And you can say, well, they're gonna make next year, they're gonna make whatever, $10 per share. Like, is that even real? Well, I think how you know that this is real is like, well, maybe those numbers lie, but the cash doesn't lie. So I see that cash in my bank account. So out of 10, I'm getting 7 or 8 in my pocket.
I was going to get to that point. Like the two typical tricks Chinese companies perform are, end of the year, get a loan from a bank and then just put the cash there. And the way they do it, it doesn't even look like a loan on the balance sheet. And then the other one is, booking a lot of sales. But actually these sales, especially if they're a marketplace, I don't know if Kaspi is a marketplace, these are sales that actually, the people, the companies use in marketplace, they produce themselves these sales in order to rank higher, but actually they're not real sales, so they're going to cancel those sales. And so you've got like 30% of the sales which are actually not sales. They're not going to generate cash flow. So, these were the things that I was, but of course the dividend is the dividend. If you're getting a 10% dividend.
Yeah, exactly. So like, like normally if it's a fraud, you take in cash. Yeah.
I don't, but it's just, I wanted to know what kind of research did you perform on the numbers in order to validate them?
Well, the other resource that you perform, again, like you don't get the full picture because like only a part of Kaspi's business and financial in nature. Obviously, it's regulated business by the Central Bank of Kazakhstan, and they basically have to file accounts directly with the bank. So you can double check as to whether that lines up. And like that regulation in Kazakhstan is like very tight. So, and that stuff lines up. But I said, like I said, ultimately, if you end up having that cash in your pocket, that's probably the best validation.
I won't challenge the dividend.
Yeah,
sure.
right. Because it just, that's just what happens, right? Because if I assume if you're a fraudster, you're about taking money in it, not paying money out.
Well, it's more about fake it till you make it. That's what I mean.
Yeah. But you can talk to Visa and MasterCard, and of course they're going to tell you, well, you know what? They took 90% of that market share from us. They're going to confirm that, right? So it's like, okay, so that's probably not something that's being made up.
Okay.
And it's run by a bunch of Harvard grads. So again, I think if you look at the number of frauds performed by Harvard grads, it's probably not.
It's not. I'm not saying it's a fraud. I'm just trying to.
Well, or not.
The ratios.
Yeah, but
the risk I'm taking. It might look like a low risk, but.
Yeah, I get it. I get it.
Yeah.
It just, yeah.
Do you think that the recent massive stock correction came from investors selling anything that has to do with Russia, or is it linked to underperformance in metrics and business?
Well, there are a few things, because first you had riots in Kazakhstan, so that led to a stock price decline of sorts. Well, then you had this Russian invasion to Ukraine. That was the second thing that sort of poured some cold water on the business. And now it's, all things tech. Like anything's tech, well, you know what, you're selling that. But is there any of that stuff really applicable to Kaspi? Probably not. I say, if anything, like Kazakhstan is probably now in a better position now that Russia invaded Ukraine, because Russia needs a hub to connect to the world now. and that hub would be Kazakhstan. So if anything, they're gonna benefit. And now I can also tell you that there were a couple of days or a few days where the stock declined massively. And what has happened is that it happened right around the time that Russian GDR trade in London got shut down and Kaspi trades in London. So what those compliance departments at a lot of brokers did, they said, you know what, we're just gonna shut all the GDR trading to buy. So it didn't matter, like you're an Indian company, you're getting shut down. You're a Kazakhstan company, you're getting shut down. So it didn't matter if you were Russian, non-Russian, like all the GDRs got shut down. So you could sell Kaspi, but you could not buy Kaspi. So that also played a part as well.
What relationship, if any, do they have with Halyk Bank? It's the largest bank in the country. It's financial services. It's some of the same things. And
Yeah, I'd like to say that's a love-hate relationship, but it's really a hate-hate relationship. So Halyk just hates them because they ate their lunch. Because Halyk, used to be like #1 in, fintech way back in the day, and Kaspi just beat them to the punch. And of course, Halyk also tried to snipe back at the company, and they tried to introduce their own marketplace and payments and stuff like that, but they just don't really have the bandwidth to get it done, so they could never get any progress on those fronts.
what's the relationship between customer overlap between the two institutions?
Well, I think a couple of things. So Halyk, they cater to both retail and commercial. So Kaspi is mainly like a retail outfit, so they don't necessarily just go after like huge businesses. Now there is going to be probably some overlap on the consumer side, but less and less because if you're a Kaspi customer in marketplace, why would you even like deal with Halyk? Like you're probably better off dealing with Kaspi directly because it's a closed loop system. Like you're gonna basically, you have your deposit at Kaspi, you're gonna get your loan at Kaspi, you're gonna make your payments through Kaspi, you're gonna buy stuff through Kaspi, you're gonna buy your airline tickets through Kaspi. So there's not a ton of overlap. I mean, normally, like once you become a Kaspi customer, you're just gonna give up Halyk because like there's no point. Like you're just not, you're gonna get so much more in terms of breadth of stuff that you're getting from Kaspi, and it's just gonna be done in a much more convenient fashion, so there is really no reason for you to stay with Halyk.
Thank you so much.
Sure, thank you.